I'm here with the US Chartbreakers here at Zacks Traders Cafe for Tuesday, the 22nd of August. Starting off with the S&P, just a limber up, and we've got the market bouncing off basically the old support there back in June and the old support there back in August last year. So around the 43.20 zone, 43.20.30, one of the levels that we've had in focus. What's surprising though, the bounce came without the market having to go into oversold territory as it did back in the autumn, or the fall as the Americans would call it, back in September. The current view is that above 43.20, we're looking for at least the 50-day moving average around 44.50. And early and end of day close back above that will then open up the door for a 4600 retest, or 4600 zone retest that we had at the turn of the month. Onto the stocks and a few old favorites here. The first one is coming up, applied Optoelectronics, and here, beautiful chart here with the shares trying to break out of this rising trend channel, the red channel there from back in April. Basically above the 1560 area, looking for the shares to head up as high as a very steep looking resistance line rejection from back in May, as high as $24, maybe as soon as the end of next month. So everything really hinging on this market closing through 1560 plus over the next day or so. The support zone around 1350, which is basically the support area of yesterday. Moving along to a new name, and one that hopefully will feature here many times, Allovir. And here you can see that the shares have broken out of this falling wedge, breaking that line there around $2.80. Above that, obviously, we've already had the meeting with the 50-day line, 355. Next target is to fill the gap and hit the 200-day moving average up towards $4.90, and hopefully we could see that over the next 2 to 4 weeks. Moving along on to a stock which has been featured here before. It is AN2, and here you can see that shares in a rising trend channel from back in November, top of the channel there, heading to as high as $20. Looking for that by the end of next month, especially while we hold above the old peak there back at the end of March around the $12 area. So above $12, looking for 20 plus by the end of next month. Another stock to keep an eye out for is CBD equipment, and we haven't looked at this before, but it looks like we're in a falling wedge breakout situation. The 50-day moving average there also around $7.40, so end of day close through $7.40. We should hopefully be back up to $8.70, which is the 200-day moving average. Best case over the next 1 to 2 months is up to $14, but let's see whether the latest bear trap rebound has legs. It looks as though it will have legs, given that we've got a bullish divergence line there from back in May, so that should power the momentum there quite well. The stock which I'm covering now for the second time, and I have to say just the whole vibe about Microcloud hologram looks like a positive one, even if the name is also one that sounds like a standout. Here we've got the shares hitting our first target there around $4.20. Above that, we're looking for a fresh target as high as $5.50 as soon as the end of next month, and maybe the way things are going by the end of this month. Ideally, we stay above the $4 area in the meantime, so the risk reward there not bad, even though the shares are well off the lows. Interestingly named stock coming up next, and you will find out what it is just now. It's my size. Here we've got a break of the 200-day moving average for the first time since back in December. Obviously, the previous times you can see were just one-day wonders, and actually the shares fell back within the day. On this occasion, though, we've actually held above the 200-day line, and that is currently around $2. Above $2, we're looking for a break of the neckline resistance there at 240 to take us up to as high as $5 by the end of next month. So high hopes for that with that U-shaped turnaround, which tends to be a very strong momentum situation, and one that's also backed by an uptrend line in the RSI window with that, so that's bullish divergence as well. So looking very strong on my size at the moment. Covered Nvidia yesterday before its results, which is always a bit of a gamble because with these things anything can happen, but the charting in this case was giving us the right steer. Shares gapped up through a rising 50-day moving average, which suggests that we should have further momentum here up towards that resistance line from last year, heading to $520, while we hold above that resistance line there from July at 444. So looking very good on Nvidia for a new leg to the upside, which obviously with its H100 offering is one of the hottest companies in the world at the moment. On to stock which may not be quite in that category yet, but we've got Orchestra Biomed breaking out of a little wedge there, bullish divergence line there from back at the end of June. Top of the channel heading for $9.30. We're expecting that hopefully as soon as the end of next month, hopefully even sooner than that, while we remain above that 550 zone. Return of Palo Alto next, and with quite a bang. Here we can see that shares have delivered one of the strongest signals you can have, or strongest charting setups you can have, which is a bear trap island reversal. So gapping down, making new lows below recent support, and then gapping up again. So basically catching most people out. Initial target here at $250. Ideally, we get to is the top of that rising trend channel from back in October as high as $280 by the end of next month. Stop loss probably the bottom of the gap on the way down, so 225 probably should cover it. Ideally, we stay up on the right side of that 50-day line, which is currently around $237. A new name is next, and one that looks pretty solid, let's say from a charting perspective. You can say that on the basis of the massive gap to the upside that we've seen, breaking through the old resistance there around $2.60. Above that, we're looking for as high as $5.30 by the end of next month. That line there coming from back in November last year. So hopefully there's enough momentum there to hit it. Moving along to Tupperware, which is the meme stock of the moment, even though it's fallen back from the $6 area. Looks like we've found some support, lasting support now. And even if we haven't, we've got the 50-day moving average there. That's around the $1.90 level, above 190. Looking for this stock to head up to the top of that rising trend channel from April, as high as $6.80 as soon as the end of next month. If you're cautious, wait for a break of that resistance line there from last month, or actually the beginning of this month, around the $3 mark. So above 3, looking for 7 on Tupperware while we hold above the $2 zone. Next stock is one which is delivered after being covered here quite recently. We've got T-Stamp finding good consolidation above the 200-day line at $2.50. Above that, we're looking for an initial target here up to $4.45 by the end of next month at the top of that broadening triangle from back in April. Another stock which is probably the stock of the day is Telesat, and that's set on the basis of the unfilled gap to the upside that we had last week. That's held that. It's broken the top of the formation there around $17.60, and above that, we're looking for the shares to hit the resistance line projection there from last May as high as the $25 mark by the end of next month. So looking very strong indeed with that turnaround on Telesat. Finishing off with a new name, and Waldencast is the name. The picture here is of a bear trap from below the old support there from back in July last year, or about August last year. That was around the $6.60 level. Looks like we're back in the range from post-September range, which was around $7.40, above $7.40, looking for a return to the top of the range of $10 over the next few weeks, maybe by mid-September. That's it from me today. More updates tomorrow.